Good morning, traders. This is Michael coming to you from Game Edge on Monday, June 23rd, with our pre-market prep session. As always, here at Game Edge, we'll go over our three pillars: sentiment, structure, and trend, and then we'll look at our zero DT trading plan for today and our key sensitivity levels heading into Monday after obviously significant news events over the weekend. Market trend model continues to the downside. We spoke about this the past week. This is based on our tick index. You can research that. Favorite investing website. The quick takeaway is this is buying versus selling in the overall market. Bolded white line as our cumulative tick, CT as we refer to it, continues to the downside under our short-term moving averages that give us an overall trend. These we refer to as our railroad track, and again we continue to see rejection via these short-term moving averages, indicating that buyers are not in control of the overall market and sellers are maintaining control. We move up here and look at our new highs versus new lows. We actually did see new highs outpace new lows, but by not a significant margin, as we've seen previous weeks when we were in a nice steady uptrend. New filtered cumulative tick plus 1,000 minus 1,000 block orders via institutionals. Obviously, this was to the downside below the zero. Reflected also in the CT to the downside, and then just a cumulative tick significantly below zero, negative 118,000 finish. So a significant amount of overall selling coming into the market. In a colored ribbon, this is our longer look back period for our overall trend, 30 plus days or 30-ish days. We do see the red still above cyan, but now the bolded CT as well as the moving averages are cutting into the colored ribbon. So this is a overall cautious bearish stance. And then if we emerge below the colored ribbon, we will obviously look for opportunity for the downside for maybe a little bit longer move or pullback in the overall market. We'll continue to watch this. Historically, we can just cut into the colored ribbon and then start moving back to the upside and resume the overall uptrend. So this will be key for that bolded white CT here to start turning back to the upside and going across these short-term moving averages and then emerging above the overall colored ribbon. And then we'd move to a little bit more bullish stance. So as of now, bearish with overall market participant positioning via our market trend model. So we're cautious there. Moving on to the SPXA, obviously expiry is over. We move to the July now. This is our cruise ships. These are larger, less turned over contracts, larger institutional positioning. We talked about this. We were extremely balanced heading into the next expiry as well as the summer for the next 3 months. So really institutions are not positioning directionally wise for upside or downside. So we'll continue to watch this and see. So really no edge via the SPXA. We could be in an overall range and chop zone via this transition, 5,900 to the downside, 60.50 possibly to the upside, or even up towards 6,100. So that may be a large summer range that we continue to look at via the overall institutional positioning, since it is fairly flat for the next few months as of now. Moving on to the SPXP, these are speedboats as these contracts turn over much more rapidly via zero DT and weekly contracts. We head into the day put dominated. Negative net GEX is pretty decent. And then our next expiry obviously is the end of the month, our next largest gamma expiry. We have our eyes on that JPM short call down there at 59.05. As of now, the market continues to hold around that 59.50, even with the news over the weekend. So it's going to be a key level. That's the COTMP also for all expiries. If you're not familiar with what that is here at Game Edge, that's where out of the money puts become in the money. And historically, we have seen monetization around that and a bounce area. Transition's actually fairly narrow for all the expiries. You see that 59.75, 59.80 for the GEX and DEX transition. That 6,000 continues obviously to be an important psychological number as well as an overall options complex number. That's actually the COI. That's the highest call open interest. So we would want to see the COI start to advance to the upside if we see out of the money call speculation coming in. PGEX is up there at 6,100. So you want to see COI obviously continue to move up there and match that level. That would be indicating that market participants are speculating to the upside via out of the money call contracts. So this usually foretells at least an overall price appreciation or at least a holding of key levels. You'll also notice now that the overall complex has eroded pretty rapidly below us. We do have out of the money put speculation via the red net deltas, as well as net GEX and net OI to the downside pretty significantly. So market participants were speculating to the downside for some sort of pullback. So we'll continue to watch this and monitor this overall structure and see if this changes. Obviously put dominated, as I spoke about, so we're kind of cautious there. GEX ratio, this is obviously a short dated call gamma to put gamma. It's a put call ratio, but we add in gamma component, time component, which makes it a much better indication of what is going on in the short term. Again, we've talked about this over the past few weeks, that the GEX ratio below 1 was not conducive of price appreciation. We continue to see that price depreciation for the SPX and the negative downward slope on the GEX ratio. So for your bull, you want to see this turn back to the upside with a positive ratio and cross above 1, indicating short dated call gamma is taking over the short dated put gamma. And if you're a bear, you want to see this continue obviously to the downside, and then most likely we'd see price depreciation in that area. Historically, around 0.5, 0.6, somewhere around in there is bounce area. We're sitting at 0.83 now, so we'll continue to watch this. But a cross back above 1 is bullish. Staying below 1 is bearish and cautionary. Delta balance heading into today, we are moving to the downside. The delta balance basically is just indicating speculation above and below spot price. The green is obviously the right-hand plane that's above spot price, and the red is below spot price. Below 0 indicates that the put speculators are in control and most likely out of the money put speculation. And then the right-hand plane would indicate they have in the money puts above us also. And then the delta balance below 0 is also bearish, indicating that put speculators are in control of the overall market. So again, a little bit cautious and bearish heading into today. We try to see a little bit of a rebound heading into the middle or rest of the week. So we'll continue to watch this and see if this plays out. See if this is just short-term phenomenon on a pullback post OPEX here, and then we then we'll watch to see if we observe a possible recovery with out of the money call speculation to the upside. Moving on the SPXP, so obviously 0 DT with our tile turned on over here. We are put dominated starting the day, so that's a bearish cautionary stance. Negative net GEX, negative 5,000, really not significant heading into the day so far. Quick takeaway is transition areas, GEX and DEX, they're overlaid here, 5975 and 5980. Those will be key areas to get above. If you're a bull, we'll watch for rejections. If you're a bear, opportunity to short if we come up under those levels and stall. We were at 5950. We'll look at see pre-market what our price is. Drunken Sailor range is 6,000 down towards 5950. Again, I've said that 5950 has been a key bounce point for the past week. If we are down at that level and we do not see a significant amount of downside speculation, that may be an opportunity to take a long for a move back towards transition. Below 5950, we'd most likely be fairly short for a move down towards 5940, and then 5940, we could see a significantly quick move down towards 5920. So those would be our shorting areas. To the upside, if we're above transition, we'll be looking for 6,000. Again, that could be a stall point depending on what our intraday volume metrics are telling us. The Drunken Sailor range will be driven by those intraday volume metrics via our vol M and vol D, vol U commands. So above transition, we look for 6,000. Some sort of stalling and rejection, we might be an opportunity to short for a move back down towards transition. Above 6,000, we'll be looking for 60.25. Most likely it's stalling into these areas as we have in the money puts overhead. Again, a fear and greed component will be coming in as these in the money put holders will be tested if we see price appreciation move up towards that level. And then if we are watching our volume, intraday volume metrics, and we see positive slopes on our call and put centroid, we could have a quick move up towards 60.25. So TLDR, quick takeaway, below transition, we'll be looking for short opportunities down towards 59.50. If 59.50 holds, that could be a long opportunity back towards transition. Above transition, we'd look for a pullback towards transition for a long opportunity. 6,000 would be that first target. Stalling and shorting at 6,000 may be an opportunistic short for a pullback to transition. And then above 6,000, we'd be looking for 60.25. To the downside, below that Drunken Sailor range, we would be full short for a move down towards 59.20, and then below 59.20 full short for a move down towards 5,900, depending on what the market trend model as well as intraday volume metrics are saying. Net stack command, this is our highest sensitivity levels. Obviously, I've already talked about these levels extensively. 6,000 will be a key level to the overhead as we've already pointed out via our other tools. In the money puts there, out of the money calls via charm, that would be a headwind for the day as long as we stay below that 6,000 level. And then net charm would be supportive down towards 59.20. Those out of the money puts. Again, you'll notice the integral, the overhead calls have a significant larger integral. So price appreciation may be difficult as we have in the money puts and out of the money calls, net delta and charm. And then the highest sensitivity levels for gamma, obviously 6,000. That's why I spoke. If we cross that 6,000 level, we may have a high sensitivity move very rapidly to the upside. And then to the downside, that lower area, 59.50, 59.40, lower drunken sailor range, out of the money puts, high sensitivity gamma area there. If we move below that, we could see a significant quick move down towards 59.20. And then below 59.20, we'd be looking for 5900. Let's move on to our trading view chart for this morning. Our levels have been overlaid. Again, we're rejecting at that key 59.75 level, Intrans, Zero Gex, P-Trans. We've discussed all those. This is the full complex. Trading view levels are produced for our members every day, and you can download those via Zero DTE or full complex, depending on what trading plan you're looking at. Again, Intrans, Zero Gex, SPY 595, key important level here so far to get above if you're bullish, or rejection area if you're bearish, opportunity to short pre-market here as we've been watching this. So again, over that level, we'd be looking for 596, which is transition. And once we move across zero and transition, we move to a little bit more call dominated area, talking about 59.80 here. And that would be some confluent with that 6,000 level, a little bit more positive gamma call dominated environment as we cross those key levels. So again, we'll continue to watch these very important levels for today at the open. We'd be very patient. Obviously, the news is going to be driving price action at the open. Most likely an emotional news gut, move open, depending on if people are taking profit on the puts, if they speculated over the weekend, or if they're underwater on calls, depending on what they're going to do via monetization and fear and greed. So again, key levels as we've outlined via transition as well as drunken sailor range for today, Zero DTE. We'll go back to that really quickly. So again, drunken sailor range 59.50 to 6,000, transition 75.80. We've already seen a rejection there pre-market. So maybe an opportunity to short via SPX for move back down towards 59.50, and then above transition we'll be looking for 6,000. Possible short at 6,000 depending on what volume metrics, and then a move towards 60.25, and then below 59.40, 59.20, and 5900. All right, thanks everybody for joining us this morning. Appreciate your interactions over the weekend. Make sure you're checking us out on X as well as YouTube. Sign up for these. Whenever I go live, you'll get notifications, and then we'll be doing our intraday posts and updates via X as those come available, and as we see key changes in the overall market sentiment. We sent out a nice newsletter this weekend also. Make sure you're signing up for that. It's free education. It goes over how we really look at the options market here at GameEdge and how we use our tools to build a trading plan to become a profitable trader very quickly. All right, thanks everybody. If anybody has any questions, I'll be here for another 2 minutes. You can post in the voice chat. And we can cover anything you want, but hopefully I've think about laid our plan for today very clearly, and the areas that we need to watch heading into the overall open. So. Great, Tom. Yeah, I think it was excellent newsletter. So good. Yeah, Tom, if you got a link, yeah, go ahead and throw it in the chat. Sure. If not, I can grab one and throw it in there when I'm done. Thanks. All right, thanks everybody. Everybody make it a great day, and we'll see you later.